This is Robert Kelly with the LA Wave Traders Classroom. All right, today I'm going to do a lesson that looks back on previous counts I've shown for Apple stock, all right, and how those counts worked out, how the market price action develops, and how the larger counts can change. And the purpose of this is to kind of give you an idea of how viable the wave principle is and to give you confidence in using it, and to show you how to update and adjust the count as needed to stay on the right side of the market or the stock or what have you. The wave count is, of course, what we're focused on here in the Wave Traders Classroom, how to count wave properly. But the real goal, I think, for most of us is not strictly the academic element of counting waves, but it's how to translate that into successful investing and trading, because that's really, to me, kind of the bottom line, using it to make money in the market. So let's take a look back at Apple now. This is going back to, November of 22. Actually, it's December of 2022. So here is a screenshot of a video wave counting exercise I did on Apple. It was the first time I did a wave counting exercise, and I did not cover the entire sort of universe of the history of Apple, but I just kind of picked a big low back in November, looks like late 2018, and counted 5 waves up here into that high. And then that led to the kind of expectation, that this is a wave, and then there's a kind of the shorter term labels placed. And, then counting the corrective decline coming from that high and try to kind of come up with, well, what do we think it's going to do in the near term? All right, so this is the up-to-date chart at that point, and the bearish count, which is kind of my preferred count, was calling for another leg down to complete a double zigzag wave 4. All right, and the interesting thing at the time was that both zigzags were equal at 122.25, which is the exact same level as the end of wave 4, 122.25 here. So that was really good support, and you had a lower target, a little bit lower, where C equals A within this second zigzag. All right, so this count was calling for a move down into a bottom, and then a move back up to new highs. So let's kind of go to the next video I did on this and see what happened. All right, so here's a screenshot from a video that was posted on January 24th, a little over a year ago, January 24th, 2023, labeling a wave 4 decline as complete. So this previous bearish count accurately foresaw this breakdown. It came close to the target. Let's see, the actual low, let me get the number here, for that wave 4 low was 124.17. So it was just a little bit above that really significant support level, which isn't a surprise. I mean, a stock like Apple, which has a history of being just going up long term, the fact that it would bottom a little bit above support and turn up, really isn't a surprise. So counted a completed wave 4 into that low, and the outlook was for a move back up to new highs. So this wave count kind of worked out, coming right to the previous fourth, pretty close to it, caught that last thrust out of a B wave triangle, and then identified this as a low fairly soon after it occurred. So let's fast forward to a more recent look at this. All right, this is video from November 16th. You can still access it online at this point, showing you the low at 124.17 in I think it was early 2023, and then from that low, the count was 1, 2, 3, wave 4 done, looking for a new high. So overall, the outlook for a move to new highs has worked out here, and the count as it was updated was calling for a move to new highs, which would result in a fairly significant top. So let's go to the sort of the next point on this. All right, so here's a screenshot of the Trader's Classroom from January 17th, where I changed the degree here. 1, 2, 3, 4, 5 up, complete. It just took out that high. And the count at the time was an intermediate wave 3 top, which would imply a very sizable decline to come, which we'll take a look at the larger count here. But so, overall, you can see that, look, Apple is a mega cap stock. You've got definitely good mass psychology at work, which is what we want for counting waves. And, of course, the stock has had a history of growth and profits, and that has kept it on an upward trajectory. So it's the impulse, the waves on the upside and corrective waves on the downside. So it's kind of a very kind of ideal trading instrument if you like to trade stuff, and you got liquid options on it. So the wave count has worked out quite well here for the last year and change. So let's look at kind of the bigger picture now, and we can see if we need to make any adjustments to this larger count. And I will just say that, again, we're just trying to be on the right side of the market. And sometimes we can end up changing our long-term count, such as what degree of top is in play here. But it doesn't affect the idea of the short-term count being clear. Right now, that's a pretty clear short-term count with 5 waves up. So it's just a question of what degree of decline are we expecting here. All right, so here is a monthly chart, and I think that this action here is not debatable. It's a pretty clear 1, 2, 1, 2. Right? The rest of it is where you have to start making some judgment calls. But from here, this looks like a, leading diagonal 1, because you've got overlap there. 1, 2, and then that's another 1, 2, because obviously it's overlapping and it's not long, so it has to be another 1, 2. And clearly that is indicative of wave 3 of 3 action coming off that low. All right, so really what you need to do here at Apple is try to count 5 waves up from the low in 2003 to time kind of the next intermediate term peak. All right, so let's go ahead and do a wave counting exercise here, because this is going to give us hopefully some reasonable idea of where we are in the big picture of Apple. So here's Apple Weekly, semi-log scale here, because it's got the stock split adjusted less than $1 to 181 right now. All right, so what are we looking at here? All right. So the first thing I see is that decline right there is the largest decline up until that point starting from this low. Let's go ahead and kind of mark where we're counting from here, because we've already got this 1, 2, 1, 2 set in stone. All right, so the question is, could you call that 3, 4, and then all this is 5? You're like 1, 2, 3, 4. No, it's not best counted that way, because this decline here is relatively small time-wise and price-wise compared to this. All right, so what does that leave us with? That leaves us with calling this a wave 1 and a wave 2. Okay, right there. All right, so then the next question is, okay, so here's the next big decline. It's obviously either a 2 or a 4. We can, that's the only two choices at this point. All right, so the question is it a 4? Could you go 1, 2, 3, 4, and then all of this is 5? Well, no, in this case, because the third wave would be shorter than wave 1 or wave 5. All right, so that means we have to put a lower degree, 1 and 2, for that advance and that decline. All right, so now we can go to let's see, zoom in a little bit here. All right, so let's look at what we got going on from this low. So this decline here is obviously a correction of the advance from that low in April of 2013. Okay, is it a wave 4? No, because it overlaps wave 1. All right, so what does that mean? Got to count it as another one too. And I kind of say a number of times, especially on my intraday stock service, that I really start to question a wave count in the stock market if I've got a series of, say, 4 1-2s to the downside that I'm counting. But in the case of the stock market, 1-2s on the upside are a lot more plausible and a lot more seen in charts. How many 1-2s have we got here on Apple? Like 4 or 5, I guess. All right, so now the question is, so here we have another solid leg up, and this pullback here, is it a 2 or a 4? All right, well, in this case, I think it's debatable. And, the question is it longer? Is this segment here longer than this one? All right, let's take a look. All right, so dollar-wise, it's longer, 58 to 22, so that's like $36. All right, and then the difference here is more like $20. All right, but if you do a percentage basis, this leg here would equal the first leg, percentage-wise, at 54.72. So it is a little bit longer percentage-wise than this one. Okay, so what we can do, we can, of course, know that it could be another one too, but I think the more conservative approach is to call it a 3, even though it's only slightly longer than wave 4. Why do I say conservative? Because the implication is for fewer number of 4-5s on the upside down the road. So if this count is right, you're not going to get another pair of 4-5s to match up with this being another 1-2. So it's less bullish and would be more conservative in having you not expecting further rally to equal the 4-5s to equal the number of 1-2s. All right, so then from that low, we're going to look to count 5 waves up to label where 5 of 3 will be done. All right, so here is where we're counting from this low, wave 4 low back in the beginning of 2019. All right, and pretty impulsive looking. And what do you see first here? You see impulsive rally, pullback, another impulsive rally, another pullback that overlaps, right? That drop overlapped this peak, okay? So we can't go 1, 2, 3, 4, right? So what does that leave us? All right, that leaves us with 1, 2, 1, 2. All right, 1, 2, 1, 2. All right, 3 of 3, I think we can safely say is right here. All right, we can put the red wave 3 in place at that high. All right, now what do we see from here? Kind of choppy rally, overlapping, maybe some of it. All right, and kind of sideways action. Well, I think that is a triangle. You can put a wave 4 right there. And when you're labeling charts, the convention is to put trend lines showing that you're counting a triangle. And it's done by putting AC, connect A and C and extend it to where E ends. And then you take B and D, get the trend line lined up to those peaks, and extend it back to the start of wave B. This is right above that. All right, so that's our wave 4. Now, this is where I think there's a little more of a judgment call kind of coming into play here. And I can see both scenarios, and I would not, if I asked you guys to submit a chart and you label it one way and the other way, I would not have a strong argument against either one. All right, so the question is that all of wave 5 for red 5 of blue 3, or somehow is it maybe 1, 2, 3, 4, 5? I think you can argue either one. The weakness of calling it 5 ending there is that if that's a blue wave 4, it's a little small. Well, it's a little small compared to the 2. All right, so, and then, of course, if you call that 5 of 3, red 5 of blue 3, then you got a wave 4 here that's pretty large compared to this 2. So it's debatable. All right, so you can make your own judgment on what you think is the best count. But let's see. All right, here's the bigger context. All right, it's not the daily. All right, so let's just play around with it. All right, so here's that interpretation where you got wave 5 of 3 ending there, 4, 5, 4, 5. And that would be minor wave 3, red wave 3. And the implication would be roughly for a decline back to that low of a little over a year ago, 124.17 for wave 4. Okay, the other count, if you count it the other way I was discussing, then you would have, your blue wave 3 ending here, blue wave 4 ending here, and then this new high would only complete that 5 of 3. All right, so let's see how that would look on the bigger picture. So if you're finishing only 3, then you'd still look for a wave 4 down towards the previous 4th. Okay, so I think that is the key message here, is that Apple can be expected to have a correction a little lower, all right, toward this low back here. So I think that's the best count. Now, we'll see if it's actually going to work out that way. Now we're getting into the kind of the real shorter term scenario. And if this count is right, then we're probably looking at something like this. Maybe that's a little truncated fifth there. 1, 2, and then another 1, 2. Like this. Okay, in which case a third wave down is underway. And it really shouldn't take out that last high there if you want to give it a little more room that high. So Apple is at risk of a larger correction while it holds below that high and especially that high. So that's kind of where you end up regardless of what degree top you want to label this recent high. Okay, this high right here. There should be a wave 4, and the logical area for it to go to is the previous fourth wave low. Now the surprise would be that this is 1, 2, 3, 4, 5 up for just blue wave 1 of 5, and then you'd have maybe A, B, C down. All right, so it would find support at the previous fourth here. So if Apple does another move down, and it looks like it's 1, 2, 3, 4, 5 down, and it holds here and then turns back up, then that more bullish fifth wave extension scenario would come into play. All right, but for now, both counts point lower, and we can see if Apple can work on down to trace out a larger correction. All right, so I hope this has been helpful. For those of you who haven't been with Traders Classroom for the last year plus, you didn't see those earlier videos, wave counting on Apple. But this just, I think, is a good example of the wave principle in action, having it work well, and the targets and support levels being useful, and taking a look at the larger count. With Apple, we have a clear wave pattern on a long-term basis. Some stocks aren't nearly this clear. So when you find something that is clear, you want to exploit it and really focus on the instruments that have clear wave counts, which I think Apple is a good example of. All right, so I'll definitely keep an eye on Apple going forward, since it is such a bellwether for the market, one of the top 5 stocks worldwide in terms of market cap. So right now, it looks like it has room to go a little bit further on the downside. That's it for today. We'll have another lesson for you tomorrow.